Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring Live, and today is Saturday, April 2nd, 2022. Appreciate you coming here, watching my podcast today. This is the weekend update podcast of the trades that I took last week. We're going to talk about when I bought them, why I bought them, and how I'm managing the trade either to the upside or to the downside. And it's been a good trading week last week. Did exit a lot of my positions because of the little bit of the pullback that we had in the market in the last couple days of last week. And so what we're going to do, like I mentioned, we're going to take a look at all the closed positions that I've had, why I entered them, when I entered them, how I'm going to manage them going forward. We're going to look at the trades that I got out of. Why did I get out of them? And yeah, it was a good week. I hope you guys had a good week. Of course, this market rally has been nice, and we'll see if it continues. Who knows? But all we can do is follow our rules. And so after looking at the current positions, we're also going to talk a little bit about trader psychology. Really is the most important skill that you can ever learn in trading, is the ability to create a plan and then follow it. Sounds easy, but it's not. We have to learn about technical analysis. We have to look at support, resistance levels, exits, emergency stops, end of day stops, trailing stop methodologies. Those are all important things, but the reason we have to learn about those is so that we can put together a trading plan, but then following the trading plan, that's the key. And if you find yourself not following your trading plan, what I have found is helpful is get someone involved. Get a friend, get your husband, girlfriend, boyfriend, partner, whatever, mom, dad involved, and show them your results. Show them what you're doing. Have someone to be accountable to. It really does have an effect on your trading. And when I mean an effect, I mean a positive effect, because you don't want to show someone bad results, right? I mean, sometimes you're going to have them, but if you're not following your plan, you have to think outside the box and come up with something. And over the 25 years that I've been trading, if you show other people your results, it just by default makes you trade better. I think for the shame factor or something, but whatever works, right? And the important part about that is if you do show your results to someone and you have to be accountable to someone, it makes you trade better, and then it becomes a habit, and kind of by default, then you just become a better trader. So I just wanted to throw that in there. So we are going to spend a few minutes talk about trader psychology, how important it is. Hopefully it will be helpful for you. After that, my good friend Frank, the trading poet, always writes poems every day about trading. Want to share that with you quickly. I think they're always fun and pertinent to what's going on in the market. After that, we are going to go down through my watch list. We're going to go down through each stock one by one. I'm going to take a look and see if there's anything for next week, possibly for an entry. Usually on any, when I go through the watch list, usually the stock has to go up or it has to go down to a certain level in order for me to get interested in buying it. I know it sounds a little strange. If I want it to go up, why do I have to wait for it to go up further? Well, because I have to find a level to key off of. Risk to reward is extremely important, keying off certain levels so that if you're right, you can be right big. If you're wrong, you can be wrong small. That's the important part of trading, and that's part of your trading plan. So we'll go through each stock. I'll see if there's some potentials for next week for something that I'm looking at, and maybe give you an idea of how I look at charts and the risk to reward ratios that I'm looking at and the levels that I'm looking at. So it's been a good week. We've had some good trades. Did get out of some trades, and I'll explain why. And so that's the plan for today. And hopefully at the end of the day, we'll go through the watch list, and we'll have a handful of things to look at next week, which might be interesting. All right, so before we get started, I have to run the U.S. legal disclaimer. So hang tight for about 40 seconds, and I'll be right back. Thank you. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. All right, well, let's get started, everyone. All right, Apple. Boy, this trade really worked out well. If you remember, I had been talking for weeks about waiting for Apple to get down to the 200-day moving average. That's really what I was looking for. I was patient, and I'm glad because it really worked out well. Here we go. I took this trade back on the 15th of March. With a confluence of signals here. I always like to have a confluence of signals, meaning just more than one entry signal. And I'll show you what the entry signals were here on Apple. Day before I took the trade, we closed below the 200-day moving average. 200-day moving average is a strong level of support. Institutional buyers come in at these levels. If it closes underneath, I don't want to be involved with it. If it closes back above, I do. It's that simple. I want to have the support of the 200-day right beneath me. And you can see the previous day we closed below, then we closed above. That was my entry, 155.50. Now I talked about multiple confluences, and the multiple confluences are as follows. Close under 200, close back over. That's one. We have a V2 here, which is an entry trigger. Bar 1, bar 2, bar 3. Bar 2 goes under bar 1's close. Bar 3 closes above bar 1's, bar 2 goes below bar 1's low. Bar 3 closes above bar 1's close. That is a V2 trigger. We also washed out or went under this previous low here of this range. I consider a range anytime you have a low with a higher low to the left, higher low to the right, that gives you the range. And you can see, if I draw a line here, that the price action went below this low, tested the low, came right back up. This is a false breakout to the downside of this previous low, so it undercut this low. So that's one, right? That's one thing that I like to look at for good price action, a test of a previous low and a rejection, and then the close under 200, close over 200, and the V2 trigger. So it's very important in my opinion in trading that you look for multiple confluences, and that's what it was. And this was a great trade. Obviously, the close under, close over, bought at 155.50. It moved up nicely. It got to my trailing stop level here, which is always 1.5 ATRs above my entry point, and it just kept going. Once I got into this trailing stop mode, if I had a close below the previous day's low, I would have gotten out and taken half, but it just kept going up like a freight train. Went up. Of course, I always take profits on a daily basis, a small percentage of my position whenever it moves 0.45 ATRs from the previous day's close. And so that's the offensive part of trading, is taking small profits into strength. And you might say, well, if you didn't, Greg, you would have made more money if you would have just held on to the whole position. Of course I would. But that's not my style of trading. I always want to take off a portion when the market gives it to me. Now, I have some other lines down here. You'll see this line down here. This is my emergency stop. So when I bought this at 155.50, if it had gone down to the emergency stop, I would have gotten out regardless. I always have a maximum allowed dollar amount that I'm willing to lose, which is a certain percentage of my account. Good rule of thumb is 1%. 1%, let's just take a $100,000 account. 1% of a $100,000 account is $1,000. $1,000 divided by the value of the 2 ATR, which is in this particular case right now 901. That would show me how many shares to buy, and that accounts for volatility. That accounts for the range of a particular stock over the last 20 days. So I know what the average range is, and the 2 ATR is 2 times the average range. So it shouldn't go down there. It shouldn't go 2 standard deviations away from your entry. And if it does, then you're clearly wrong. So whenever I look to enter a trade, first thing I do, I look for the signals. I look for the confluence of signals like I mentioned on this. I position size, take my maximum allowed loss divided by the value of the 2 ATR. That tells me how many shares to buy. I know that if it gets down to my emergency stop here, I know exactly the dollar amount that I'm going to get out of. Now I also have my end of day stop. My end of day stop on this particular trade would simply have been a close below the 200-day moving average. I didn't know it was going to go running up like this, but this possibility, that's why we trade. and gives me the possibility for a nice upsize gain if I'm correct, small loss if I'm wrong, and that's the key to profitable trading. So did buy this here at 155.50, got to trailing stop level, did not have any closes below the previous day's low. I have another rule in my trailing stop methodology rules is if I get above a 65 RSI and then I close below the 5 EMA, that is my signal to get out of the entire trade. Of course, the Apple went up here, got to 65 RSI. On Thursday, we closed below the 5 EMA. That was my exit, and I got out of the trade completely for a 10.85% gain. So pretty sweet, pretty sweet. Thank you, Apple. And at this point, I would be waiting for a return to value here, sideways motion V1, V2. That would be my most likely next entry on Apple if that happens. But anyway, 10.85% gain on Apple, which was great. SPY, same thing. All right, here we go. Now I had multiple exits on SPY. I bought SPY here with the close under, close over the 300-day moving average. I bought it at 434.61, had my emergency stops, had my trailing stop levels. So bought here 434.61, moved up to my orange line, moved up to my trailing stop level. Once I get to trailing stop level, if I have a close below the previous day's low, I get out of half. This happened the next day. So the first half of this trade locked in 2.11%. Now I only sold half. I wanted to keep half in case we kept moving up, which we did, and gratefully I did because it moved up nicely, nicely, nicely. Of course, taking partial profits on the way up as well. And so I kept the second half, kept the second half of the position. And then on Thursday, again, it closed below the 5 EMA. That was my signal to exit the whole amount. So again, the signal was a close under, close over the 300-day moving average, set my trailing stop level, met that 1, 2, 3, 4 days later, had a close below the previous day's low, locked in profits on the first half at 2.11%, continued to go up, continued to take profits, partial profits along the way with the remaining shares that I had. And then my rules told me to get out of SPY on Thursday with the close below the 5 EMA after it after it got to 65 RSI. So the second half got out for a 3.91% gain. So that's how it goes. That was a great trade. We have the 200-day moving average down here. So this coming week, depending if we get a nice rejection of the 200-day moving average, might be interested in that. So that was another daily trade. All right, now here's a trade. Good example of following your rules can be frustrating sometime. I did buy Philip Morris on the 24th of March with a close under, close back over the 300-day moving average. Also had a higher low V2. MACD was green. I really like this trade. So got in at 92.48. Next day got me out, barely closed under the 300-day moving average by a couple pennies, but I have to follow my rules. And so I did get out for a very small loss, for a 0.42% loss. But then look, moved up and to the moon like a rocket ship. But that's what happens, but if I had not gotten out here, it could have continued to go down and then I'd be lost. So it's going to happen to you as a trader a lot. Your stop level is going to come in, you're going to get out, and it's going to rally right back against you. And I know it's a bummer, but it's just what happens. But we're as traders, we are looking to manage risk first instead of profit. And if I would have concentrated on this, if it would have closed below the 300-day moving average, and I was like, well, I'll give it another day. I think it's going to go up. I'm just not following my rules. And of course, it would have worked out great because it took off like a rocket ship, and it's kind of unfortunate. I could have bought here the very next day with a close back over, but I didn't. I was buying other things, but just a good example of it's frustrating to follow your rules, but in the long run, you have to. So I did enter with the close under, close over the 300 at 92.48, and I got out with the close under for a very small loss at $92. So a loss of 48 cents, a loss of 0.42%. Gold. All right. I did buy gold back here on the 23rd of March with a 520 crossover. Really like crossovers, the 520 crossover on gold, especially if it comes from sideways motion. Bought here at 181.54. Moved up the next day. Luckily took some profits off. Then on the 28th of March, I got out of half of the position. The 5 did not cross under the 20. That's normally the mechanical exit, but what happened was the price closed below both the 5 and the 20 while the 5 was still above the 20. So I got out of half of the position at 179.10. And then the next day we had a 520 close under, which I got out of the second half of the position. So on the first half of the position, bought here, got out at, so the first half of the position I lost 1.31%. The other half of the position I lost 1.32%. So just about a wash. But again, the reason why I got out, I had the crossover, had a close below both the 5 and the 20. It's a bit of a bearish signal. It's a bit of a red flag. So I got out of half. I kept the other half until the 520 cross under happened, and it crossed under. So small losses. But I will be looking for a 520 crossover on gold again next week. All right, so those are the dailies. Now let's look at the weekly trades. So I did buy IWM, which is the Russell 2000. I bought it back in January on the 28th. We went under 30 RSI, over 30 RSI. We rejected the 100-day moving average, and we rejected the negative third ATR channel. Always important to me when prices get to the negative third ATR channel, because 92% of prices do tend to stop going down and or bounce when we get to the negative third ATR channel. And on top of that, my entry signal was the under 30 over 30. So I bought at 193.20. These are weekly bars. Of course, as it moved up, I took partial profits. My stop was a close below the 30 RSI. I did exit half of my IWM position on Friday, yesterday, because the entry signal was an under 30 over 30. But then on, do you see the RSI here right now, 47.24? See how it was higher during the week? So we did reject the 50. That's an overhead resistance level that we did reject. So I did sell half of my position, locked in a 7.11% gain. Now, interesting, whenever I take an under 30 over 30, if it moves 1.5 ATRs from my entry point, then if it ever gets back to my entry point, I would get out at break even, although it wouldn't be a break even trade because I've taken profits along the way and I also locked in half. But whenever I have an under 30 over 30 and I move 1.5 ATRs from my entry, if it ever comes back to my entry point, I get out. So I did lock in a 7.11% gain on Russell, and I still have half of the position. As it keeps moving up, I'll continue to phase out if it continues to move up. If it rejects the 50 SMA here, that will also be a reason for me to get out of the trade, and then I would be completely out of the trade. But anyway, so far, really good trade there on IWM. Facebook, another weekly trade. I took this back on the 18th of March with a close over the 300-day moving average. I have the position size, place my emergency stop, place my trailing stop level up there. My end of week stop on this trade will be a close below the 300-day moving average. And you can see it's still holding above. And this particular trade in the money, about 3.71%. So grateful for that. Now let's go over to my one monthly trade, which is LOVE, which is Southwest Airlines. I bought that back on the 31st of January. V2, day one, or bar one, bar two, bar three, bar two goes under bar one, bar three closes above bar one's close. That was the signal. We also closed above the 100-week moving average. My stop is halfway of this washout bar of the day two bar. Halfway, if it closed below halfway, I would get out. You can see it did come back, test that level, bounce. The next week did go way down, test the level, bounce, but held on to the halfway. And this particular trade has been underwater for a long time, but currently right now it's up 2.98%. So those are The trades, the Apple trade, I am out of because we got above 65 RSI, closed below the 5 EMA, got out, locked in 10.85% gain. SPY, got out of SPY because we moved 1.5 ATRs from entry, then had to close below the previous day's low, got out of half for a 2.11% gain, continued up, got above 65 RSI, closed below the 5 EMA, got out of the rest of the second half for a 3.91% gain. Philip Morris had a very small loss there of 0.42%, which is acceptable. If you want to be a profitable trader, you have to have large wins and keep the losses small. Well, I would say keeping a 0.42% gain loss is keeping them small. Gold, of course, another small loss, got out two partials for 1.13% loss and 1.32% loss. IWM, nice, locked in a 7.11% gain on half the position. Facebook, still holding, up 3.71%, and then Love up 2.98%. So all in all, pretty good. All right, so I talked about trader psychology and did want to do a little bit on this. Wanted to highlight, this is actually my trading partner, Ava. Please follow her at Presence Trades over on Twitter. Boy, is she a great trader. So smart, so dedicated, just is at one with trading. And I mean, the work ethic that she has and the learning that she does every day, just really proud of you, Ava, and honor that we're trading together. But please follow Ava over at Presence Trades. Here she says, trading tips that help me succeed. Let's see what they are. Number one, stay present. Focus on the process, not the results. That's true. If you can focus on the process, just focus on what you're supposed to do. Focus on your plan. And keep those losses small. Let your winners run. You know, it's all very difficult when you're losing money, making money. You want to take profits. Like, I totally understand. But really, when you dial it down, when you distill it down, what's important in trading is following your process. As long as your process is built upon good risk to reward ratios, good levels, things like that. But don't focus on the results, focus on the process, and the results will come. Keep an open mind. The market can change direction at any time. It's so true. You know, some days I go into a market where I feel like, oh, I think we're going down today. I'm like, Greg, why are you even thinking that? Right? Follow what the market does. Be open to it going up, open to it going up higher, even higher than you thought. Be open to it going down even lower than you thought. But she's 100% right. Keep an open mind. The market can change directions at any time. Number 3, embrace any outcome before entering a trade. So important. You know, I get back to my emergency stop level and my maximum allowed dollar loss. Usually 1% of your account's a good rule of thumb. But if you're okay with a certain loss on a trade with your emergency stop and you've given it plenty of room, then you have to really be okay with that dollar loss, right? And I'm not saying it's $1,000 for you. I'm just saying if you had $100,000, 1%, like maximum allowed loss would be $1,000. And that maximum allowed loss only comes about 5% of the time, but it does happen. But, you know, worst case scenario, maximum allowed loss, if you're okay with that dollar amount, if you're really emotionally okay with that, then like Ava says, embrace any outcome before entering a trade. And the worst outcome, if you're okay with that dollar loss, fine. That's the worst thing that can happen. But if it goes on up, great things can happen. So embrace any outcome before entering a trade. Be okay with it. Focus on setups with multiple confluences of signals to put more odds in your favor. That's right. I've been talking about this for years. You know, if you have 3 trades, one of them has an under 200 over 200. The next one has an under 30 over 30. And the third one has an under 30 over 30, under 200 over 200. Which was the best one? The one that has the number 3, right? The one that has the multiple confluences of signals. The more signals you have, the different groups of buyers you have, the more groups of buyers you have, the better chance you'll have a profitable trade. Only go for trades with a well-defined risk, at least 1 to 2 risk to reward ratio. That's true. I don't take a trade unless I can make at least 2 times to the upside what I'm risking to the downside, and make sure they're well-defined risk. Well-defined risk would be a 30 RSI level, a 200-day moving average, a 250, a 300, right? So go into trades where if you're wrong, you can be wrong big. If you're wrong, if you're right, you can be right big, but if you're wrong, you can be wrong small. And that's what Ava's talking about here, with having a well-defined risk and making sure that your reward to the upside is minimum 2 times to what you possibly could lose to the downside. Know where your stop is prior to entry. Well, of course, whenever I get into a trade, first thing I do is I have to position size based upon volatility. That's extremely important, right? Based upon, take your maximum allowed loss divided by the value of the 2 ATR. That's what I do anyway, and that adjusts my position size based upon the volatility. Then I need to know what my maximum allowed loss is, right? Have to know this before I get into the trade. How far is that? That's 2 ATRs from my entry. That's the emergency stop. I have to know my end of day stop. Well, if I buy right above the 300-day moving average, like I did on Philip Morris, if it closes right back below, then it's a very, very tiny amount of risk if I'm wrong. But if I'm right, I can turn into a big trade like I did on Apple Trade. But she's right. I use 2 stops. I use an emergency stop, end of day stop, and that end of day stop, I want to be as close to the end of day stop as wrong. So if I'm wrong the smallest. Take partial profits into strength. Well, yeah, I'm a huge proponent of this, right? We always talk about stops to the downside. That's important. But if the market moves your way, I like to take some partial profits into strength, and that's what I use with my 0.45 ATR profit target each day. And last one, do not let a profitable trade turn into a loss. For sure, that's always a bummer. That's why under 30, over 30s, if it moves 1.5 ATRs for my entry, if it ever comes back, I just get out of break even. Some of the best traders, in my opinion, are the ones that can take a scratch trade. And so this is really, really good information. I appreciate this. Thank you, Ava. Please follow Ava over at Present Trades. Okay. Let's take a look. I talked about Frank. Please follow Frank at FrankOD over on Twitter. Great trader, great journalist, great musician, and he writes trading poems. How can you do better than that? Let's see what he has to say. Here's to the market when it's just plain nuts, making no sense, no ifs, ands, or buts. To the market when it dishes out all kind of stuff until frustrated traders shout, enough is enough. A salute to the traders who hang in tough. I agree. Salute to all traders. It is not an easy occupation. You're dealing with emotions like ecstasy, disappointments. What a great game trading is. It really, really is. And I love how Frank puts this together in poems. So one more. Here's to a toast to traders. Here's to the market when it's just plain nuts, making no sense, no ifs, ands, or buts. To the market when it dishes out all kind of stuff until frustrated traders shout, enough is enough. A salute to the traders who hang in tough. So, I'm saluting all of you. It's been an interesting beginning to this year. Big down move, big up move. It's frustrating. Why do we do this all? Because we love it, right? And the more you do it, the more you're going to get better, everyone. And so any of you who are new traders, just starting out, struggling, hang in there. Hang in there. It's going to be fine. Cut those losses quickly. Wait for those confluence of signals. Know where your supports are. Have your emergency stops. Have your end-of-day stops. Know where you're taking profits. Know where overhead resistance levels are. Have a trailing stop methodology in place. So you got to have a plan, everyone. I just watched King Richard, the show with Will Smith and the Serena Williams and Venus Williams. And, he pushed those kids hard. He, of course, wanted them to succeed at tennis, which they did fabulously. But in the show, they always have a little motivational poster in the back there that says, if you don't have a plan, then you're planning to fail. It's so true. It's so true in trading. You need a plan, everyone. You need a well-balanced plan. If-then statements. If it does this, I'm going to do that. If it does that, I'm going to do this. But you have to have a plan. All right. So thank you, Frank, very, very much. I appreciate that. And all right, let's head down through the watch list and see if there's something interesting. Now, by the way, I just want to point out that, I'm going down through this watch list pretty quickly. Just trying to give you an idea of what I'm looking for, something that's interesting, something that's not interesting. But let's take a look, see if we can find something. And don't force a trade, everyone. If there's no trade there, then don't force a trade. But let's just go through here, and we'll take a look and see if we have some interesting setups for next week. Okay, well, I already have Apple. There's really nothing here on Apple that I'm interested in. I got out with the close below the 5 EMA. Just some ideas here. You know, if we came into the value zone, move sideways, V1, V2, then I'd be interested. I would, of course, be interested if Apple got back to the 200-day moving average. Who knows if it's going to do that? It may. You just never know. Remember, we have to keep an open mind in the market. But when I go down through here, I'm going to talk about the levels that I'm looking for. But I know it's kind of quick. And, you know, on my YouTube channel, I have some free lessons on there in the lessons and playlist video. Visit my YouTube channel. If you hear me talking about V1s, V2s, crossovers, things like that, I don't really have time to explain all of the nuances of and all of the particulars of the trade in this podcast because it's kind of a quick review kind of a thing. But you can go to that channel. You can watch the playlist, the lessons playlist, and hopefully that will help you out. And in addition to that, and I'll talk about this a little bit at the end, but you know, I do teach private one-on-one lessons in the evening time via Skype where I teach my students step by step exactly. So if you're watching me do this and you're not quite sure, I understand because I don't quite have the time to go through all the nuances here, but you're certainly welcome to contact me, set up the lessons that I teach, 15 hours of one-on-one instruction. And so keep that in mind. I think you'll be happy that you did. All right, so Apple, I don't really see anything likely yet for next week, so I won't mark anything there. Adobe, no, don't really see anything here. We had a lot of deep dip buys here, a lot of signals. Look at this, under 30, over 30 would have been fantastic. But now we've rallied, you know, and we're kind of in an interesting inflection point where we've rallied here. We're coming into some resistance, so I don't know if there's going to be any really good trades, but we're going to go through here and look. But I don't see anything on Adobe that I particularly like. AGQ, okay. Well, AGQ, a little bit interesting here at the 200-day moving average. It did bounce at the 200-day moving average. I believe that does backtest well. We also could look for a 520 crossover. If we move up, that would be a legitimate signal. So next week, if we have some nice additional rejection of the 200-day moving average or perhaps a 520 crossover, I might be interested in getting long silver. So I will mark that. AMD, well, geez, you know, I looked back at this trade on AMD when we had a close under, close over the 300, and I didn't take the trade, but boy, what a great trade that would be. But look, we have had a significant pullback. I was going to buy this on Friday if we had a rejection of the 300-day moving average, because back here you can see we had a close under, close over the 300. We had one more close under, then close over. So it is respecting this 300-day moving average. This is the orange line right here. So next week, one of my favorites is if we have some kind of close under, close over the 300-day moving average, some kind of intraday rejection, some kind of bounce, that would be what I would be looking for to be interested in AMD. So yes, I am interested in AMD, perhaps even a close over the 250. This is the 250, but you see how we closed under. So we're stuck under the 250 and above the 300. So close back over the 250 might get me interested. I'd actually like to buy it off of the 300 because it would be at a lower price, but definitely AMD is something I'm looking for. Here is Amazon. Boy, we've had a huge move up here on Amazon. You know, I was looking at Amazon, but not for a long. I was looking for a short with this close back under the 200. And if it closed over the 200, that would be my stop. It came from a higher high. I don't really like to short things from a higher high. I'd rather have it close back above the 200-day moving average, form a lower high, and then close back under. That would be what I would be looking for. But I'm really concentrating on longs on this podcast. So nothing on Amazon. ARK. Don't really see anything likely here on ARK other than a 520 cross under and cross back over. That might take a while, so I'll let that one go. Boeing did have a 520 crossover right here, which does backtest well coming at a sideways motion. I don't really see anything here on Boeing other than if we had a close under the 5, closing under the 20 and then back over. That might be interesting. I'd really prefer to come down deeper, get down deeper into the value zone, and then have the 520 crossover. So I will mark Boeing in case we have a 520 cross under and then back over. Alibaba, don't really see anything on here. We are coming back into the value zone. I would need some sideways motion, V1, V2, but who knows if that's going to happen. Doesn't seem super likely, so I'll let that one go. Berkshire Hathaway, wow, what a huge move up, everyone. Beautiful. If we came into the value zone and had a V1 or V2 next week, I would definitely be interesting. I like to buy the first dip into the value zone after a big, huge move up here. So I will mark BRKB, but only interested if we get back into the value zone, have some sideways motion, and a V1, V2 entry. Bitcoin, well, Bitcoin has really taken off here. You can see the 200-day moving average is acting as resistance. We closed above, closed back underneath. If it closed back over, would I get long Bitcoin? I would not. We're too high in the channel. I don't take any under 200, over 200s, or deep or under 250, over 250, or under 300, over 300s if it's above the second ATR channel. So I don't really see anything here on Bitcoin, but congratulations. Nice rally for people that have Bitcoin. Anheuser-Busch. Well, you could say, Greg, look, it's under the 200. If it closes over the 200, would you buy it? I would not. Again, I don't buy under 200, over 200s, or 250s, or 300s if they're over the second Keltner channel, which is right here. So I don't really see anything here on Anheuser-Busch. Beyond Meat had this nice rally. A lot easier to buy these deep dip buys than right in here. And we've had this big move up and sideways consolidation. Who knows if we're going to continue up or pull back. But looking at Beyond Meat right now, I don't really see anything that's likely for next week. Caterpillar, well, Caterpillar had kind of a large down day here. Here's the 200-day moving average. Pretty deep. It's below the value zone. I'll mark this. Caterpillar has had this huge move up here, looking for a pullback. If we came back to the 200-day moving average, that would give me a good risk to reward ratio. I know there'll be some buyers of the 200-day moving average. And in addition, look, if we take the low of the range and the high of the range, if we use from a Fibonacci standpoint, if we got back to this 200-day moving average, we'd be closer to a 50% retracement or a rebalancing equilibrium point. So I'll mark Caterpillar. I don't know if it's likely, but if looking at this chart with a nice move up, a pullback would be expected. If we could get back to the 200-day moving average, have a good risk to reward ratio, I think that'd be a decent entry. So I will mark Caterpillar. Cameco, boy, it's been very, very strong. Too high for me up here. If we came back to the 200-day moving average, yeah, of course, I would want to buy down there. That just makes sense. That's where it held last time, but it's not likely that it's going to go down, so I'll skip. Carnival Cruise Line, I really don't see anything likely or anything that I'm interested in here. We're kind of in this range, in this mode in the market where we've had this huge rally, and now we could consolidate, go higher, or we could come back lower. So I have to be a little particular about the trades here. There's not a lot of great levels right now because just in the context of what this rally that we've had on the market, having a pullback would make a lot of sense. Or we could go up. Remember, we have to keep our minds open to that. But as far as a trade, that's a glaring trade for me next week, I don't see one on CCL. DoorDash already made a lot of its move. We need a bit of a pullback. Nothing likely on DoorDash. Dow Jones, well, we got above the 200, then closed back below it. Again, you could say, Greg, if it closed over the 200-day moving average, you could buy it there. No, not really. because it would be above the second ATR channel. But look, we have the 300-day moving average down here. So I will mark Dow Jones. If we reject the 300-day moving average, that might be an interesting spot. Walt Disney, don't really see anything here on Walt Disney at the moment. DocuSign, huge rally, but need a pullback. Doesn't look likely anything glaring. Etsy, don't see anything there. Facebook, I'm in Facebook, but I'm in Facebook on a weekly trade. Don't really see anything here on the daily. FCX, don't see anything on FCX. Fiverr, need a pullback to the value zone. Don't see anything likely. Gold, well, 520 crossover on gold next week. I would take that, so I will mark gold. GNRC, don't see anything there. Google, well, I will mark Google. I mean, we've had a huge rally in Google. Pullback makes sense. If I could get a pullback to the 200-day moving average, that would be fantastic next week, or the 250 or the 300. So I will mark Google. We'll go back over these. We'll recap. Goldman Sachs, 520 crossover to the upside would make sense. So I will mark Goldman Sachs. Has earnings though. If we got the crossover before earnings, I would get out prior to earnings. I never hold through earnings regardless of the time frame. Home Depot, wow, Home Depot just keeps going down here. I would be interested in Home Depot next week if we could go under 30 RSI and over 30 RSI. It would put us down here near the negative third ATR channel. Remember, 92% of prices tend to stop going down and bounce there. So if I could get a confluence of an under 30, over 30, right near the negative third ATR channel, I think that would be a good risk to reward ratio, especially on a company like Home Depot. So I will mark Home Depot with an under 30, over 30. IBB, nice strong move here, but a little chasey. Would at least need some kind of pullback into the value zone. And the value zone is anywhere beneath this green line and above this green line, so anywhere in this section. It's really important, big picture in trading, to buy in value, sell above value. Buy below value, sell in value. Unfortunately, what most people do is they buy these breakouts and they buy these big moves up looking for momentum to continue. But I don't like to buy above value. I like to buy in value, sell above value, buy below value, sell in value. I don't want to buy above value and then have my stop me out at value. So nothing on IBB. INDA, wow, what a huge move. No, nothing. Well, Intel has come back into the value zone. This is what I'm talking about. Look, here's the third ATR channel, third ATR channel, third ATR channel, third ATR channel, and it has a hard time going above that third ATR channel. It happens sometimes, but most of the time it's going to mean revert back to the mean, back to the value zone. If Intel could go sideways for a couple days inside this value zone and they get a V1 or a V2 trigger, that might be interesting. But I'm not going to mark Intel right now. IWM doing great on the daily. Of course, I have this on the weekly. Johnson & Johnson, well, we're well above the value zone. A pullback into the value zone. Sideways motion for a couple days. V1, V2 triggers. That would be interesting. Don't know if that's likely. I would love to buy Johnson & Johnson back down here at the 200 or the 250 or the 300. Buy it on sale, right? But doesn't look likely you would get there, so I'll skip. JO, don't really see anything likely here. Respected the 200. CarMax had a nice bounce here, but I don't see anything at the moment. Coca-Cola, look at that, straight to the moon. Wow, nothing on Coke. Lockheed Martin had that big move up, back into value. Don't see anything likely there. Southwest Airlines I already have, but that's on the monthly chart, so I don't really see anything here on the daily. Lyft, nice consolidation, nice sideways move, nice price discovery. Lyft might be interesting next week. We're right here in the value zone. If I could get a V1 or a V2 back into all the support, yeah, might be interesting. So I will mark that one. MasterCard, nicely above the 200-day moving average, but we're up over the second ATR channel, so still too high. So I'm going to skip MasterCard. McDonald's, well, 200-day moving average here, right underneath the second ATR channel. If McDonald's came back down here, a significant pullback to the 300-day moving average, that would be interesting. It respected it last time. It's just a little too high. That 200-day moving average really too high for me to key off of. So we'll mark McDonald's. Don't know if it's going to get down here. If it did, this is the spot I would buy it. Merck, big, huge day up. Want to send congratulations to my friend and my former student, Mike, aka Leva. He bought Merck off this 200, I believe, and what a run he has had. Congratulations, Leva. Morgan Stanley, don't really see anything here. We're at a 39.19 RSI. If we could come back down, test this previous low while we have a MACD divergence, which we can tell. MACD divergence is you have a low with deep red MACD bars. See the red bars here. Then you rally into some green, which we've had. If we could come back down, test this low with very shallow red MACD bars, that would give us a double bottom bullish divergence. We also need a trigger, an under 30 over 30. So yeah, I'll mark Morgan Stanley. I think Morgan Stanley would be a great buy with the proper signals if we could get down to test this low, double bottom bullish divergence. It would line up nicely with the negative third ATR channel and under 30 over 30. So I don't know if this is going to happen, but it would be a good spot, good risk to reward ratio. So I will mark that one. Microsoft, sure. If we came back to the 200 and tested and gave a good risk to reward ratio, that would be great. Or the 250 or the 300. So I will mark Microsoft. Netflix, don't really see here anything on Netflix. Nike having a bit of a pullback. We ran into resistance at the 50 EMA, SMA, 50 RSI. So I don't really see anything here on Nike. Nvidia, well, sure. Let's mark Nvidia because right off the bat, look, if we came back to this 200-day moving average, right? Doesn't mean I'm going to buy it now. I have to be patient and wait. But if it came back to the 200-day moving average next week, it would be a big move down. But yes, I would buy that. So I'll mark it. Pfizer, I don't really see anything. I mean, 200-day moving average with the confluence of the negative 30 ATR channel would be great, but that's a big move down. Don't think that's likely to happen, so I'll pass. PKI did bounce at the 250 here. PKI back down here at the 300-day. You can see that's right where it had support. So yeah, PKI, I'll mark that if I could get another rejection of the 250 or the 300. PLTR, don't see anything here. Big picture needs to at least pull back to the value zone. Philip Morris, ooh, that was a tough one. Nothing there. PayPal, I don't see anything there. Qs, well, important level for the Qs was the 200-day moving average. Up here, you can see it got to the confluence of the 200-day moving average, the third ATR channel. 92% of prices fell there. It pulled back. Where would I be interested in the Qs? Well, here at the 300-day moving average, that would make sense. So if we pull back, reject the 300-day moving average, then I'd be interested in getting back in the Qs. Rio, great trade. Ava bought this all the way back down here with the rejection of the 200, and it took off like a rocket ship. Way to go, my friend. Great trade, but obviously for a new trade, no, too extended. Shopify has had a nice run, but I don't see anything for next week. Remember, we've had a big rally, so it limits the amount of potentials for next week. Don't force it. Let the trade come to you. And so that's why I'm marking these levels here. SLV, we already have AGQ marked, so I'll skip. Snap, big run, needs some kind of pullback, nothing there. Virgin Galactic, wow, what a huge move up here, but I don't see anything likely for next week. SPY, yeah, if we came back down, tested the 200-day moving average on SPY, I would be interested in SPY, so I'll mark SPY. Teladoc, no. Teradyne, nice pullback into the value zone. Another good example of not wanting to buy up here near the second ATR channel or even higher, because a lot of times it pulls back. But this is a nice pullback. Don't see anything likely though. Bonds, big reversal on bonds. I remember watching this on Friday. This is a higher low V1 in the value zone while MACD is positive. This could be positive for bonds. But don't really see anything likely other than an under 30, over 30, and don't think that's likely, so I'll skip. Tesla, big, huge move up. Where would I be interested in Tesla? Here at the 200, here at the 250, here at the 300. That would be a huge move down. Doesn't seem likely, so I'll skip. Twitter, some kind of return to value. Don't see anything likely. We've had a big rally, so it limits. Don't see anything on Unity. UAL, well, we closed above the 200-day moving average, but it's up near the third ATR channel, closed back under. So not interested in United Airlines here. Just don't want to chase, need a pullback. UNG, huge move up, no likely new trade set up for next week. UNH, been doing well, nothing likely. Oil, been kind of crazy. Back in the value zone here, don't see anything on oil. Dollar, nothing likely. VIX. VIX has been holding above this 200-day moving average. It does not want it to go back under. A nice little rejection of the 200 and, going below and then back above. I would possibly be interested in VIX next week, so I'll mark that, but I would need a rejection of the 200-day moving average. But you can see the black lines, the 200, it really has been holding this the whole time. So that is a significant level. If it goes down, test it, goes right back up, we may go back up. And so I'll mark VIX. Verizon, don't see anything there. Look at that sideways motion. Wow. WBA, wow, earnings, good example here, everyone, of not holding through earnings. Yes, sometimes it can gap up. We all know that, but sometimes it can gap down. Interesting on WBA. Look, we're at 2970 RSI. We have rejected the negative third ATR channel. So next week, if I could get a nice gentle close back above the 30 RSI, then I would be interested because I'd have a confluence, an under 30, over 30, and a rejection of the negative third ATR channel. We have tested the previous low over here. It is on sale. So yeah, WBA looks interesting. Walmart, huge move up. Need to pull back to the 200. So I'm going to skip that. Energy, kind of starting to form a range here. Don't see anything likely. XLF, they're the financials. It did reject the 250. Technically, that would have been a decent level, but I like the 300-day moving average here on XLF. So next week, if we rejected the 300, is where I would be interested. Real estate, possibly pull back to the 200, doesn't look likely. XLU just taken off like a rocket ship. I remember I almost bought XLU here with this intraday rejection of the 200. Boy, that would have been the spot, but too extended at the moment. Healthcare would need to pull back to the 200. Doesn't look likely. Exxon, no. And Zoom, no. But remember now, we've had a big rally, right? We've had a big rally. We've come into some resistance. This is an extremely important time to be patient and wait for the levels. So the stock symbols that I've marked here, we'll go through and review these now, and I'll show you again what I would be interested in and what I would need to happen to get into any of these trades. AGQ, this did reject the 200-day moving average. That would have been a legitimate entry on Friday. Didn't take this one. But if we retested the 200, close back above, gently close back above, wasn't too chasey, then I would be interested in AGQ. So another rejection or close under the 200 and then back over, using that as an end of day stop would be one scenario. A 520 crossover would be a second scenario. Most likely one would be the retest of the 200-day moving average. So that's the potential if we have another retest of the 200-day moving average. AMD, probably one of my favorites here. If we have a rejection of this 300-day moving average, that's one scenario, or a close back over the 250. So remember at the beginning of the podcast, I talked about something having to move higher or lower. Well, that's exactly what has to happen. We're stuck right in purgatory between the 250 and the 300. So if we close back over the 250 and a nice gentle move up, not chasey, then that would be of interest. Ideally though, right down here at the 300-day, if I could get a rejection of the 300-day, that would be perfect. Back at the support. That's probably my favorite trade of the potential week, would be AMD. Boeing, if we had a 520 cross under and then back over, that would be something I would be interested in. Berkshire Hathaway, some kind of pullback to the value zone with a V1 or a V2 entry. After this huge move up. This is a huge move up. Usually the first move back down to the value zone gets bought. So that's what I would be looking for on Berkshire Hathaway. Caterpillar, I would need this to come back down here to the 250, the 300, or the 200 would make sense. Big move up, makes sense. It would have a pullback. Just find the level at the 250, 300, or the 200 here. So don't know if that's going to happen, but that's what I'll be looking for. Dow Jones Industrial, I would really be looking for a rejection of the 300-day SMA right here. So that's what I would be looking for there. Gold, looking for a 520 crossover. That would be my entry point next week. Google, possible retest of the 200-day moving average. Would give a good risk to reward ratio at a major level. Pull back to the 250. I like that one much better, or the 300. So a key off of the 200, 250, or the 300 next week. Goldman Sachs, some kind of 520 crossover or a retest of this bottom, giving us a double bottom bullish divergence. Some kind of under 30, over 30. That would really be the spot on GS for me, is down in this area, or 520 crossover. But this is really what I would be looking for. I don't know if it's going to get there. It looks unlikely, but a retest with a double bottom bullish divergence, some kind of under 30, over 30 would be an excellent. And we might get there with earnings. That might bring us down. Home Depot, under 30, over 30 is what I would be looking for next week. So that would be, Home Depot has really gotten beaten up here. We're in the low 30s, so an under 30, over 30 would also dovetail with a test of this previous low, most likely. Maybe the negative third ATR channel. So an under 30, over 30, make it simple on Home Depot. Lyft, some kind of 520 cross under, cross back over. We are back in the value zone. Sideways motion V1, V2 would also be of interest. McDonald's, a pullback to the 200 would be interesting, or to the 250, or to the 300. I would ideally the 300 because it's back in the value zone. It's back at this support level. So that's what I'll be looking on McDonald's, ideally the 300. Morgan Stanley, looking for a double bottom bullish divergence, under 30, over 30, rejection of the negative third ATR channel, so somewhere down this area. Microsoft, retested the 200. Yes, I would be interested in there. Retested the 250. Yes. Retested the 300 for sure. Don't know if it's going to get there, but those are my levels on Microsoft. Nvidia, pull back to the 200. That would be an ideal trade for me. PKI, ideally a rejection of the 300-day moving average here, or another retest of the 200. It's not chasey, but I don't like the huge big down bar. But honestly, what would I really like? A retest of the 300. The SPY retested the 300 as well. Look, we've moved up significantly. Some kind of pullback makes sense and is to be expected. So a retest of the 300-day moving average here is what I'd be looking for on SPY. I'm on Q, excuse me. On SPY, a retest of the 200 or the 250 or the 300. So basically, I'm looking for a pullback. VIX, some kind of nice intraday rejection of the 200-day moving average. That would do great. Walgreens, a close over the 30 RSI. We're at 29.70, so we'll close back over. And then XLF, really a retest of the 300 here is what I'd be looking for. So those are what I'm looking for next week. I hope that's helpful. Earlier in the podcast, I talked about what I'm looking for here, that I'm going through these pretty quickly. And you may be saying, Greg, I don't understand V1s, V2s, crossovers, things like that. Well, I do teach private one-on-one lessons in the evening time via Skype. I love to teach. I've been teaching for years. I've taught people from all over the world. I've turned out some really, really great traders. So, if you're interested in really learning trading one-on-one, which I think is the best way to learn anything, send me an email. The email is in the link of the description of this YouTube video. I do offer one-on-one courses in the evening time via Skype. As I mentioned before, it's 15 hours, 5 sessions, each session's 3 hours. It's a pretty intensive course, but I teach you everything I've ever learned about trading. And it's a great course. It really is a great course. You're going to learn a lot. You're going to become a better trader. And I think the best way to learn anything is one-on-one with your instructor. And that's why I offer classes this way. So if you are interested at all, the price is $1,750. It's worth every penny. Just send me an email. Email's in the link of this YouTube video. Say, Greg, I'm potentially interested in taking your course. I'd like to learn more. I will reply and say, great, let's set up a Skype call. The Skype call is free. It's not a sales call. I promise you that. I just want to learn more about you and your trading challenges, your trading goals. And then it's a good time for you to ask me any specific questions about the course. And when we're done with our little meet and greet, think about it as long as you want. I'll never ask if you want to take the course. You just think about it as long as you want. And if one morning you wake up and you decide, hey, today is the day, send me an email, say, Greg, I'm ready to go. Let's get it scheduled. And we will, and you're going to learn a lot. But I know you're going to love this course. And like I said, to really learn anything, the best way to do it is one-on-one with your instructor. Number 2, I do have an online video course available at udemy.com. It's a great course. A lot of the trades that I've taken lately have been deep dip buy setups. And in that course, I teach you step by step how to trade that. You're never going to not know what to do because it's rule based. It's black and white. It's color by numbers, but it uses a lot of great trading principles. And that course is great. I've sold so many of those around the world, so much good feedback, reviews, and you can't beat the price. The price is somewhere between $12 and $15 on udemy.com. And I teach you step by step. The course is 9.5 hours of video, 26 videos total, 15 study guides. And so, if you're not doing anything this weekend or you have some time this week, spend the $15, the 12 or $15, watch the video. You're going to love it. And the link is in the description of this video. And then lastly, if you like today's podcast, I really would appreciate it if you could hit the thumbs up button. It helps to build the channel, helps to keep the channel around. It lets YouTube know that there's some valuable content here. So I hope you have a good rest of your weekend. I really do. Go out, get a little exercise. Hope you have some fun. Hope you have some laughs. Be good, be safe, drive safe. If you could try to remember to do one nice thing for another human being today, it really would make the world a better place. If you could also try to do one nice thing for an animal, it would doubly make the world a better place. And that's one of my goals every day. I try to do something nice for another human every day. I try to do something nice for an animal every day. And if we all did that, the world would be a better place. So again, thank you for coming. If you could remember to hit the thumbs up button, I really would appreciate it. If you have any questions about anything, you can post them in the comments below. If you could share it online, I would appreciate that. But it's nice that we've had this rally, everyone. Things were looking pretty grim there for a while, especially for swing trading. But I hope this helped today. I hope some of these symbols that we went through gives you an idea of how I look at particular trades, looking for the good risk to reward ratios, looking for the levels, getting out quickly when I'm wrong, having a nice 2-to-1 risk to reward ratio or more to the upside is what's important on the to the upside, because you have to have some positive trades to pay for all your little trades. If you're trading correctly, most likely you're going to have a lot of little losers, but you have to have some big winners to pay for that. So again, thank you so much for coming. Have a great rest of your weekend. I hope you have a good trading week next week, and thanks for your time. All right, and we'll see you next weekend, and hope you have a great upcoming trading week. Okay, on the way out here, I have to run the U.S. legal disclaimer. Take care, everyone. Thanks again for coming. Bye. U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation, and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.